Peter Rose, Longwood Currency Trading. Trading by not trading. Sitting it out. I made $618 yesterday, last night actually, just as the market was opening. And it's Monday, and I'm going to sit on my hands today and enjoy the beautiful New England, very, very wet, rainy weather, as you can see. My brother taught me the fine art of southern porch sitting. Not that he was from the South or anything, or we were, but it's a skill you might want to learn as you approach retirement, or even not, because we were actively doing it when I was working full time. I embraced that, as the Zen folks would say, sitting quietly doing nothing is sometimes how you are able to see the opportunities in life. And so today, I made a lot of money yesterday, and so I'll make some money if it throws itself at me today. I've got the trading platform open. I opened it as soon as I got up this morning. Looking at it, there looks like there's some opportunity there that'll come on later. I've got my plan all set. When I get done out here, I'm going to finish my coffee, and then I'll go back inside and see if anything's going on. Then I have some emails to get to and some other stuff that needs to be done. But the point of the thing is, Jesse Livermore so aptly put it, is that once you learn what not to do, you learn what to do. And that's really the crux of trading, is making mistakes and learning what not to do, so that there are just a few things left as to the things that you do. When I'm working with somebody and advising them in their trading, that's really the crux of it. You have to have the opportunity to fail in order to get rid of all the crazy stuff in your head that you think is going to work. I'm an engineer. I got a bachelor's in physics. I had a 33-year career as a software engineer building business applications, 40 years of a small investment real estate properties. I looked for complexity in solving complex problems. That was my problem. That was my issue. And yet I had to make all those mistakes along the line, more of them than most people do, because that was my job. That's how I'm wired up. In order to finally let go and say, well, this is wrong, and this is wrong, and that's wrong, and I did this wrong, and I lost money, and I did this, and I did that. What am I doing? And as I've told the story many times in this channel, I lost $40,000. I traded in a simulated account for 4 years, off and on, and I was running 15% a month profits. And then I get out into the real world, and I was trading a $40,000 level account in the simulated account, because I knew that's what you do. And so when I moved into my live account, it was $40,000, and just it was gone. What happened? Don't waste your time in the simulated accounts. I'm telling you, if you're spending years in a simulated account, you're wasting your time. You really are. You're not. It's not the real world. In any event, I lost that money, and I sat down and I took my analytic thinking process and went through everything and said, I've made this way more complex than it really should be. And what do I need to do then in order to not make it complex? And I took my remaining $5,000 and I doubled that in about 4.5 months. It was within $200 of doubling in 4.5 months or 4 months, something like that. Now, as I've said often, I probably couldn't do that on a $100,000 account, or a $200,000 account, or maybe even a $30,000 account, because you're taking more risks, and they're really not risks. They're calculated moves that you make from a tactical standpoint, and in the end, if you have a good win-to-loss ratio, it'll come out okay. Now, sometimes because those tactical decisions you make cost you a lot of money, or a series of losses that add up to a lot of money, then your gain over that period of statistical trades, 10 trades or 20 trades or whatever it is very low. You get very bad results. But because the statistics work against you and for you, then you get on the other side of it and you go. Now, the thing to do from that is to say, well, what was I doing before that I'm not doing now that's making it successful? And you'd be surprised at all the stuff that you were doing that you can throw out in favor of the few things that you should be doing. And that's probably the hardest concept that I can convey to folks that are asking me about how to better their trading. You know, I primarily work with traders in the 4-figure to low 5-figure account size. They know that the potential of this, and they know they're not going to make $1 million on a $10,000 account. They're working to gain the skills in order so that they can trade a 6-figure account or 5 full lots or 8 full lots or whatever. And they know that's how you're going to make the money, not by taking a small account and compounding it and making it bigger, because you're trading differently then in order to do that. So that's the toughest thing, because when you're trading on those smaller lot sizes and dollar sizes, you're trying to make money. And that's not the point of the thing. Making the money isn't the gauge of your success. Because look at all the idiots out there that are on these videos. Oh, you know, you do this and you do that, and you know, look at me, I'm driving around in my Lamborghini and blah, 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 blah. These guys are trading at 200 to 1 leverage and they're getting lucky. You know, if you cut your losses really quick, yeah, you're losing a lot, but letting those runners go, if you have a $10,000 account at 200 to 1 leverage, and you can let that runner go and get 4 or 5 trades in a row, you're 6-figure account. And then you just kind of stupidly continue to do that for a while, and all of a sudden you find you've made it $200,000 or $300,000. Great. There's one of you for every 60,000 people. You're not going to know how to teach it if you've done that, and your ability to call yourself a trader is poor, because now you're giving advice that's only valid for protecting the money that you have, as opposed to helping somebody grow their account as it goes. And then what do they do with the money when it gets to be large? How do you trade that? And sometimes trading that is doing what I'm doing right now, which is I'm away from the trading desk, and I'm going to sit here and I'm going to continue to drink my coffee. And the point is not to bore you by rambling on with this stuff, but to give you the permission, if you need that. Don't trade. You don't have to trade to make a lot of money. All you have to do is wait for the opportunity to hit and then go in and make your trade. Now, for those of you that all of a sudden just said, oh, but I want to trade, I've got an answer to that, because this is what I do. I go in the morning and I look at the charts, and if I don't see anything, I don't do anything. I drink my coffee and I do my email communications with folks, and you know, I'm still involved in martial arts, and I'm talking with folks that have been in my association for 30 years, you know. So I've got that to do. The other day I did a video, I showed you the dug up yard that we've got where we're going to put the new deck on, and so there's plenty of stuff to do and have fun. I'm reading 2 different books right now, so there's plenty of stuff to do. You don't have to sit there and stare at the screen and conjure up a trade. You look at the screen, and your experience says, not now, this is not the time. If this happens, maybe there might be some interest there. So every now and then you check the chart, and if it hasn't happened, just stay away from it. Don't put a pending order on there. Do not do that. Because when you do that, now you're married to the screen. You're committed. You're pot committed. You put an order down there, and if that order gets hit, you're in love with it, and you're going to follow through with that. That's not the time to put your pending orders in. Your limit orders. You wait until the price action is saying, I've got the momentum. Well, how do you know that? And I've said this many times, it's a differential between the size of the candle and the ATR. What does that indicate? It indicates that order flow is moving in that direction. How do you determine when the order flow is increasing? That's the secret. That's the secret sauce, to determine when the order flow is beginning to increase. And when you see that happening, that's when you put your limit order in. Now, there's some rules that go around exactly where that limit order should be placed, but that's just background noise. That's something that you just learn, and from what not to do, you've learned that, what to do as to where to put that limit order, and then you stick it on there. Maybe you're going to do a series of stages of lots, as long as you're not trading with a small account. If you're trading a 4 or low 5-figure account size, you're not going to be doing any staging. You're going to be all in, all out, and that's a lot of fun, because you can take your 3 mini lots or whatever, stick them in there as a limit order, pick out 10 pips or 20 pips or wherever you think the thing is going to go, or 3 pips, whatever you're going to squeeze that for, and you're in and out. Okay. Now, if you make 10 pips on a lot, you've made 1%, right? So that's a lot. That's 1%. Are you going to go in there and trade again? What are you trying to do? Are you trying to make 2% on your money a day? 3%? 4%? You know, if I hit it really, really good, I've done 4% days, but I mean, about every 10 trades, I'll get a 4%, or I'm sorry, I've done 4% before, but I'll get a 2.2%, and that's a big move, right? You don't catch those all the time. But I'm happy to get. Look, if you could get a 0.5%, that's 5 pips on 1,000. $5 on a $1,000 bank. 5 pips on a $1,000 bank is $5. That's a 0.5%. If you could make $5 a day, you can make $500 a day. And if you do that, how tough is it to make 5 pips? It's not tough at all. What becomes a little bit more involved is averaging 5 pips a day. That becomes a little trickier. That's why you don't just get out at 5 pips. You get out at 10 pips or 12 pips or 20 pips or whatever it is to make up for the losing trades, and the other ones where you've had to just get out at 1 or 2 pip profit because you can see that the price is turning against you. So there's this balance between that, and I keep talking about this win-to-loss ratio. The win-to-loss ratio tells you whether you are doing the right thing, as opposed to scrambling around messing with all the wrong things, right? So you'll find that your win-to-loss ratio will improve by trading less when you're abstracted away from the trading screen and saying, oh, there's nothing going on right now, I'll go take the trash out, or I'll go do the laundry or something like that. And then you come back 20 minutes later and you check and you go, hey, things are turning around. If such and such and such and such happen, I'll probably look at going in. That isn't the time to set up a limit order. You have to be calm about the thing. What difference does it make if you end up talking on the phone to somebody and come back and the thing has already manifested itself and is done? What difference does it make that you missed the trade? You don't think there'll be another one? I look at everything from, I look at the 4 hour, the 1 hour, the 15 minute, and 5 minute, and the 1 minute. I look at them all. because I want to know what's the field of battle look like. If you were a golfer, you'd be looking at the entire course to determine what the conditions were and whether it had rained the other day or what was extra dry or right. Okay, so you do the same thing. You have to study the field of battle, and that field of battle changes all the time in currency markets, and so you're simply familiarizing yourself with that field and what it's going to be like today and where the forces are moving stuff around. And then finally you get to a point where you say, oh, this is about the point where I would probably think about taking a trade. That's where you sit down and you say, okay, am I ready to put a limit order in, because I'm expecting that limit order to get hit within the next 5 minutes. And I'm expecting, if I put a limit order in, that the entire trajectory of that planned trade will take place within the next 15 minutes to an hour. Remember, if you're doing your trading entry analysis on that 5-minute chart, you have 12 opportunities an hour to determine whether you want to do anything, or if you're in the trade, whether you want to get out. And so the fact that you miss a trade doesn't mean anything. You just missed that particular trade. Maybe if it goes the way that you thought it was going to go, 20 or 30 pips, what do you think is going to happen? Well, there's going to be a retracement. Maybe you could jump on board for that. But you have to know how to play both sides of the trend. In any event, don't be so anxious to start throwing limit orders on or getting involved in a trade or whatever. Why are you trading? You're trading to have a better life. You have a better life because you have the money to buy the time to enjoy your life. Right now, maybe you're encumbered by having a job that you don't like. 85% of the people don't like their job. And so why don't you do something about that by learning a skill that will have the income to replace that job? In the United States today, right now, the minimum wage is $15 an hour. You can sit at the window at Burger King and make $13 an hour in the area where I live. I don't know if you're in a rural area, maybe that wouldn't be the case. Or if you're in New York City, you might be making $20 an hour. I mean, I don't know. But right here, it's $13 an hour. Well, that's $26,000 a year. Wouldn't it be nice to make $15,000 a year? Make 2/3 of that amount of money by trading? How tough is it to make $10,000 a year? What size bank do you need at a reasonable leverage in order to generate $10,000 a year? You just do the math and you work it back. I do this all the time with folks that I work with. And they go, really? That's all I have to do? That's right, that's all you have to do. So do you want to screw it up? Do you want to screw it up? Because you're not just losing $100 here. You're losing the opportunity to make $10,000 or $100,000 or whatever it is that your goals are set for yourself. Now, I've talked to people that want to make $60,000, $80,000 a year. Great. Is that going to happen just because you get the secret sauce and you have a $300,000 account? Is that going to? Are you going to be able to do that? Of course not. You're not going to be able to do that because you don't know how. So, if you're chopping around on that low four-figure to, a four-figure account to low five-figure account, and you're not really getting the results that you need to get, you really need to talk to somebody. If you want to run some stuff by me, send me an email. I'd be happy to respond. I respond to all serious emails and try to help you out. And if there's more interest in communicating with me and trying to figure out some other stuff, I'll send you a form. I call it a questionnaire form. And it has all kinds of questions about you, who you are, what kind of trading experience you have, what your education is, what your job is, and what are your goals for your trading, and all that other kind of stuff. And you send that back to me, and I look it over, and evaluate it, and I write responses down. I summarize what you said, and then I write my thoughts down about that. And then I'll have a video chat with you for free, no charge. And we'll talk about it. And we'll see if I can help you out. 9 times out of 10, I can get you on the right path for no charge. But sometimes I run into folks, it's going to take some work. Now, whether that's a full course, if you need a full course, Well, that's a really expensive option to take. Maybe some consulting. Well, that's not cheap either, but it all depends on what you need to do. If I can help you out in a couple of emails, that's fine. But you know what happens is that what's the answer to a question? It's another question. And so that's where the consulting comes in, where you have this the ability to communicate with me over a period of time on a video chat or in person or whatever, to put all these little pieces together, where sometimes in emails I might be able to give you the answer, but then that just generates another question. And then we get involved in emails, and the texts tend to lose the impact of continuity that you really need in order to help yourself. I mean, you're not going to get a teaching certificate in history without learning history and having somebody teach it to you, even though all the books are out there, right? And so you have to be reasonable about how you're going to plan your educational process. But rather than that, you don't want to listen to me anymore. Please don't do anticipatory trading. Don't sit there and look at your charts and say, oh, this should happen, and start throwing limit orders down on the you don't have to. If you miss it, you miss it, because there'll always be another opportunity, and it'll be a lot of fun when you start getting this stuff right, and you can say, oh geez, I just made $600 and I don't have to trade tomorrow. I mean, $300 a day. just do the math on that. It's $1,500 a week. It's $6,000 a month. It's $72,000 a year on $300 a day. You trade the 3 full lots and you make 10 pips a day. That's it. That's all you need to do. Okay? Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.